Hey everyone, welcome back to the TraderLion channel. This is Richard here with Ross Haber, and today we're continuing on with our Chart of the Week series, going over the NASDAQ Composite and discussing the overall health of the market. So Ross, I'll hand it over to you. What are your thoughts on the overall health and breadth of the current market?
I'll tell you, just starting off with the indexes, more of the same. We've done this for a few weeks now. Last week, okay, so we've got the NASDAQ here. We had one up day, which ultimately was on lighter volume, stalled out underneath its 10-day moving average. But you can see the NASDAQ rode its 10-day moving average down, ultimately closed on Friday, picked up volume, closed on its lows below 13,000, not too far off its most recent low. And again, this is just the index compared to the S&P 500, but that, relative strength lines kind of giving you an indication of how weak it is, relative to the S&P 500. So, but it's something worth, I think it's one, I pay attention to it. It's just a little extra clue there. To clean this up a little bit, let's go ahead and take a look at it on the weekly chart. I think this kind of, we can draw a declining tops line right here. We can see we continue to rally for the most part on weaker volume, fail at resistance, roll over, sell off, volume picks up. We've done it, we struggled here both, let's see, for the last 3 weeks, right? Ultimately rolled over. Last week closed on lows, picked up volume again. Last 2 weeks we've sold off, closed on lows on heavy volume, and it's increased the last 2 weeks as well. So it's got both things going on there. So same sort of thing with the S&P 500. Oh wait, actually, before we jump on, Richard, let me clean this up. Is there anything you wanted to add to the NASDAQ before I?
Yeah, nothing too much to add on my part. I think it's pretty clear we're in a downtrend corrective state right now, but I think it's really important to stay optimistic and stay flexible because things can shape up a lot sooner than anybody thinks. So keep doing your homework. But just looking at the chart right now, you can see we've been rejected at the short-term moving averages. The last few times we've rallied back into them on lighter volume. And until we kind of see a character change where we get back above those moving averages start curling up under price, that launching pad setup, I think that's what we're waiting for. And of course, we've got that DTL that Ross just drew. And we talked previously in a prior video about looking for that big capitulation day, that big reversal, hopefully undercutting something on the left-hand side of the chart. So keep that in mind, and I'll link that video down below. I think it's definitely a great watch, still very, very applicable to the current situation. Yeah, so that's pretty much all I would add. And Ross, I'd love to take a look as well at the S&P 500.
So the S&P and the NASDAQ were almost twins. The only reason you see that relative strength line, falling apart relative, and look, just so we're clear, the S&P 500 relative to the S&P 500, obviously a straight line, right? Yeah. So relative to the NASDAQ, right, the NASDAQ is much, much weaker. And again, we've discussed it exhaustively, I guess, maybe at least several weeks, maybe even a couple of months ago. A lot of that has to do with the nature of the stocks that live on each exchange or live on each index. Right. You've got a lot more of your traditional growth. It's much faster. It's much more volatile on the NASDAQ, whereas that S&P 500 has a lot of the larger cap. They're growing at a slower rate, just slower moving stocks. And it also happens to be where a lot of the more defensive issues lie, as well as a lot of oil stocks and all of the stocks that have actually been leading the way, like a lot of the gold and basically the mining stocks and energy and oil. Right. A lot of those are on the S&P so that's why you see that big divergence relative strength wise. Again here, but you're looking at the same thing, relative strength lines converging to the downside. I guess some people call this the death cross, when the 50 crosses down through the 200. I've never found any really statistical significance, as far as that having any relevance, or maybe it's worked a few times, but certainly there's nothing consistent going on there. Unless someone's got a new study, please let me know. But in general, it's not what we want to see. These are the opposite of those launching pad setups. This is, we've got all of the moving averages converging to the downside and rolling over as volumes picking up along price, right? So if you were to turn this upside down, it becomes, a launching pad. It's this same sort of thing. Imagine if the chart was upside down and we were using that as our pivot. We wouldn't be too upset with this action in here as it was pushing and volumes picking up. So, like Richard said, and let me tell you something, right around, I think we just forget who I was talking to. It might have even been on IBD Live. FTNT was my short pick of the day, but I told him first I wanted to short 100 shares. I remember really badly the day before. And that was it. That was the dead low. It's rolled over since, but let me tell you something. I had no chance of sitting through shorting any of that stock that day. So, once I start looking at things and go, wow, that really has a chance of looking bad. Maybe you get a rollover, but I will tell you, anyway, that is not a high probability trade for me. And I have found that once my mentality and sentiment gets super negative and I'm so positive that everything looks like a short, I can't tell you how many times within 3 days or a week, everything turns around and my mind has been blown. So I always keep it in mind. I have no idea which is going to happen. I wouldn't be surprised to see either. So at the end of the day, the important thing to remember is, as bad as everything can look, and as negative as your sentiment as may be, as horrible as things may look, always remember that things can change very quickly. So do your best to just eventually the market will bottom and it will turn up again. Pull up a 30 or a 50-year chart of any of the indexes. They go from the bottom left up to the right. And, as you shorten them, the whipsaw goes. But at the end of the day, stock market's engineered to go higher. It's just a matter of time. Quit driving yourself crazy trying to guess the bottom. Be late, not early. I'll tell you, be late, because when a new, sustainable, powerful uptrend begins, who cares if you're early? And I'll tell you, you can be early and then give up that. It's much better to be late than drive yourself nuts trying to catch a bottom early. That's how you chop yourself up.
Perfect.
So,
I think we'll leave it there. Yeah, stay flexible, stay open-minded. I hope you guys enjoy this video. If you did, go ahead and leave a like down below and subscribe if you're new to the channel. And we'll see you guys in future videos. Thanks.